People who look at this and are saying, "Oh, well, once it gets to 1 million, I'm going to sell and I'm going to take some massive, returns." They don't. What they're really saying is they have no clue what's actually playing out here. Because if this goes to 1 million, it's going to 10 million, it's going to 100 million, it's going to look like a Zimbabwe note of 100 trillion units. And that's what I think. If, if you think it's just going to go up to 500,000 and then it's going to kind of stop there, and that's kind of like where it ends, and like that's the end of Bitcoin. It's now stabilized at 500,000. You really do not understand like what's playing out here. And I think the higher that you go like that, the more aggressive the bid is actually going to get, and kind of get away from legacy policymakers and people controlling currencies, fiat currencies as we know them. Now, when does that happen? I don't know when that happens. I don't know if it's this cycle, next cycle, or whatever. I don't know. But people that are suggesting that Bitcoin is going to have smaller and smaller returns into the future, I think are getting duped a little bit as to like what kind of plays out in the middle of that S curve. I think that's what's happening with those kind of ideas and comments.
You are extremely bullish, Preston. I like that answer. Makes me want to just go ahead.
I don't see it as being bullish. I see it as being. I'd like to think it's just very logical. Like for us to go from something that was worth a couple pennies to $1 million for an imaginary Mario coin like thing that's just a ledger entry on a global database. For somebody that would hear that 5-10 years ago, they would have literally laughed you out of the room and said, "There's no way that could happen." And then the question you should have asked that person is, okay, well, at what price would you stop laughing and take it very serious? Which was the actual question that was proposed to Andrew Sorkin this week on CNBC. And as you noticed, he refused to answer the question. And him not answering the question is telling you what he actually believes, which is, I don't want to be wrong, and I don't want to say 100,000 or 500,000, because in the back of his subconscious mind, it's going there. That's why he's not going to answer that question. And so, once you start getting to those levels, what's really being communicated through the money is all trust is breaking down in the legacy monetary units. Okay, make no mistake about it. That trust is eroding. That's why somebody's willing to squat on an imaginary entry in $1 million, $1 million a coin price, is because they actually have way more trust in that system than the legacy system. And if you think that trust is going to kind of like stop or plateau at that point, I don't know what to tell you. I'm sorry, you don't understand it, like point blank.
Yeah. What about you, Lyn? What's your take on that? Preston's put a lot of thought into this, I could tell. Lyn, what's your take on this? Are you a believer of the diminishing returns, or are you a non-believer?
So I think it depends on details. Last cycle, before the cycle played out, when I was kind of recommending it to people in 2020, I assumed a diminishing cycle. And because the numbers in that kind of intermediate term period, I think would be pretty big for that one cycle. And it actually underperformed even my diminishing. Like I thought we'd hit 100K, for example. Actually, my initial estimate when it was like under 10K was like 30 to 50K at least. It was like a really conservative one. And then we hit that. I was like, well, I think it's going over 100. And we never really hit that second target. We later found out that there was a lot of rehypothecation and, people naked shorting Bitcoin like FTX. And, there's a lot of things that went into that. We also had like the tightest Federal Reserve policy, the most rapid tightening in a very long time, as they try to fight back against the inflation that they partially caused, along with the fiscal authority. And so I did expect diminishing returns last cycle. This cycle, I'm much less confident that there's going to be diminishing returns. I think there's a good case to be made that this cycle or the next cycle has a surprising breakout where there's not diminishing returns. And so everybody kind of has it in their mind of what's going to play out, and I think it's going to surprise one way or another. Last time it surprised to the downside. I think this time could easily surprise to the upside, and the people that think they're bullish at like 100K or 200K could get completely shocked by the some numbers it hits. But then again, maybe not. Maybe if it goes to 150 and then maybe it corrects down to half that and then goes up the next cycle. There's so many variables that go into these things that I try not to give any sort of specific price in any sort of 2-year time frame. The statement that I generally have pretty high conviction on is that usually Bitcoin does well in global liquidity, positive environments, and usually it struggles in lower liquidity environments. That's one of the biggest factors that goes into it. But I never really associate a specific magnitude with those kind of more directional observations. And you mentioned unit bias. I do think that's one of the things that holds people back. They see $40,000 a coin, and some people don't even know it's divisible. That's its own thing. But even people that know it's divisible, it seems expensive. So what I would point people to is market cap, right? Market cap, I think, is a more sensible way of looking at it, which is that should this asset be bigger or smaller than one company like Nvidia, right? Should it be bigger or smaller than gold? Should it be bigger or smaller than Apple? Should it be bigger? What percentage of global assets or global purchasing power should this be? Right. I think that's a better way to think about it because it's a divisible asset. There's 2.1 quadrillion satoshis. And so the unit can be whatever we want it to be pretty much. And it's really about just the overall purchasing power of the network and your share of the network. Um, and so I think that's kind of a way to approach it. And for people trying to trade it, it's like, people are waiting for these specific price targets. Either they want to exit at a certain price level or they want to get in at a certain price level. And I just don't think that's the best way to think about it. I think the way that the time it makes sense to either take chips off the table or add to your position is more so about risk management, volatility management, making sure that your portfolio is not kind of keeping you up at night. So for example, if Bitcoin goes up tremendously and the daily moves begin to just overwhelm the rest of your assets and you're always thinking about it, yeah, it can make sense to take some off the table and put it back into equities or buy a real estate with it, or whatever if you're holding back on a consumption, that might be the time to do it. On the other hand, if it's in despair and it's got completely crushed, and you have liquidity from income or other sources, maybe that's a time to lean into it. The way I approached it last cycle was I didn't touch my cold storage at all. I do run these model portfolios, for research clients, and that's got this, Bitcoin slice in it with things like GBTC or different brokers have different way to get Bitcoin price exposure. And for that, I would take some chips off the table and then put some chips back in every 18 months or so. And it's not based on a specific price target. It's more just based on, is this asset going way above the allocation percentage that would I think would scare away people kind of following this portfolio. And then when it dips back down, it's like, okay, now it's cheap, now it's under allocated, I'm going to add back into it. But that's really more about kind of that portfolio management. Whereas cold storage Bitcoin, I'm one of those people that's just there's the price that would get me to sell those coins is not really a price. It's more about what can I buy with those coins.
Yes.
I agree with that Matrix meme of like, like you tell me I can trade it for millions one day, and it's like, no, when you're ready you won't have to, which is basically the implication that I would generally hold it until I either want to, basically it's money, right? So I would hold it until there's something I want more than that money, right? It could be I want to consume something. It could be there's an investment that I finally perceive to be kind of better than Bitcoin because Bitcoin's already huge now, and it's like, it's closer to its total addressable market, and maybe there's a really cheap investment that I think is going to actually outperform it. I would diversify, relocate into some of those assets, but that's a zip code away from in terms of price from where we are now.